You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPKEX volatility products. SPKEX options and futures are traded on the SPKEX Volatility Index, SPKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPKEX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating, ever-compelling network upon which so many of you are binging. Remember, if you like what you hear, Vol Views, anything on the rest of the network, leave a review. It does help the new folks continue to discover the content. You can do it on the Vol View show. You can do it on the network show. You can do it on our mobile app, wherever you get our content. There are no shortage of outlets for you to go out there, leave reviews, because there's new folks discovering this stuff all the time. It's crazy. Just when you think we've reached everybody, there's new folks coming out there. And of course, if you like even more options and volatility content in your lives, great pro Q&As, great options oddities coming up right after this show today. So if you don't want your broadcast week to end with Vol Views, you want more options analysis, options content in your life, you want to get live access to this and everything else we do throughout the week, you want to get the exclusive pro podcast feed that has all the 100+ episodes we've already put up there, which is a lot of great content there, as well as, of course, we're about to give away. Coming up on Monday, we're going to give away the October Pro Trading Crate. Those are cool. People keep asking us if they can buy those. The answer is no. You got to be over there on the pro side. How do you get entered for the drawing and everything else I just talked about? Theoptionsinsider.com/pro is the place to go to learn more. And let's see who's joining us on the old Vol Views program today. First, let's go out once again to the Southern Volatility Mecca, known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to Volatility Views, sir.
Hey, good to be here. Happy Friday. Quite the day.
Happy Friday indeed, yes. It usually is Friday on Vol Views, which is always nice, makes it fun. Also sad for some of our listeners because it is the last on-demand show we do for the week. But hey, if you want more, you know where to go to get more content in your ear holes. And then, of course, joining us there, holding down the MIAX hot seat this week, Mr. Matt McFarland, the derivatives product and business development specialist over there for MIAX Futures. Mr. Matt, welcome back to Volatility Views, sir.
Thanks, Mark. Happy to be here. Looking forward to talking to you about what's been going on in the volatility space lately.
All right, then let's get to it. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. That music means it is time for the Volatility Review, the portion of the show where we break down what the heck is trading and trending out there from a vol perspective. And kicking things off here to wrap up our week here, listeners, we are seeing interesting markets. We were seeing a little bit of love, a little bit of joy, a little bit of enthusiasm. It was probably a welcome respite for the bulls out there because ever since Powell really chopped the legs out from the market earlier this week, there haven't been a lot of signs of hope, a lot of signs of optimism, but it seemed like maybe today the bulls were going to maybe shake things loose. And we started running north earlier, got up to, looks like, how high do we get? It looks like right around the 3780 odd level in the S&P, maybe a little bit north of that this morning. And then the bears had sharpened their claws. They were taking a break, listeners. They were just sharpening their claws and then started dragging us back down, threatening the 3700 level again to the dark side. We were bouncing around right now, listeners, as we're kicking off the show here. Slightly unched, slightly green, slightly red in the S&P. Dow still up slightly, about 0.2%. The NASDAQ off about 0.2%. But again, wait 5 minutes if you don't like those levels out there. In terms of vol, we have seen quite the evolution just in the last hour as well as we've seen the markets turn around. Spikes was looking down quite a bit as we kicked off the show. It has gained a fair amount of that back now. It's still down, but down less. It's at about 26.75 when we kicked off the show. That puts it down about 0.75 of a point from where it was this time last week. VIX was hanging out in a 24 handle. Now, when we kicked off the show at about 25.25, that puts it down about 1 point from where it was this time last week. And then VVIX, the vol was at about a 77 when we kicked off the show. That's down about a point. I'm sure if we rack those now, it might be a little bit higher. Again, we've been saying watch that one for a while because if past his prologue, VVIX can hang out in that mid to low 70s range for too often or too long. So it seems like it's already starting to pop. We shall see. And our old friend, speaking of vol, the Viking, a.k.a. VSPKES, at a 96 when we kicked off the show. That's getting pretty low, listeners. The low we've seen, that's down a point, obviously, from last week. And the low we've seen since this product was launched was about 89.5. That was back on July 29th of this year. So we're not that far away from that now, listeners. Certainly are quite away from the high, which was about 206 that was set back in December. I think it got down to about a 93 and change this week as well. So we're flirting with that all-time low out there in the Viking as well. All right, a lot of table setting. Let's go around the horn. Let's go back the opposite of the way we started. Let's go start out in the land of the MIAX hot seat. Mr. Matt, a lot going on this week. We had the Fed juicing things up from a vol perspective, spooking the markets across the board. What was catching your eye and lighting up your tape out there this week, sir?
Yeah, Mark, the Chairman Powell really put a damper on things. You know, coming into the week, we had two positive weeks. The week of October 17th, SPY gained 2%. The week of October 24th, SPY gained nearly 3%. And then Chairman Powell really just took the wind out of the bull sails, and it's been a rough week for the market this week. But one thing I want to call to your attention and to listeners' attention is there's a pretty significant price difference between the Spikes index and the VIX index at the moment. Spikes is trading about 1.5 vols higher than VIX. You typically do not see that wide of a spread. Historically, that spread is about 15 cents. So we're about 10 times wider than normal. And the main driver behind this divergence is some nuances in the methodologies used by Spikes and the methodology used by VIX. And that's specifically to the options maturities used. So Spikes uses monthly expirations. So at the moment, we're looking at SPY options that expire on November 18th and December 16th. Of course, to get a measure of 30-day implied vol, you need to have options expirations that straddle that 30-day time frame, and then you interpolate to come up with a 30-day implied vol. VIX, on the other hand, uses both weeklies and monthly expirations. So VIX is using the December 2nd SPX weekly options and the December 9th SPX weekly options. So clearly, under normal circumstances, you don't see much of a difference in these expirations, but the November 18th SPY options, as well as the November 18th SPX options, have much higher vols currently than the other maturities that are being used. And I suspect that has to do with the election next week. But I think it's important to point out that anomaly that's going on in the market right now. And I think having a better understanding of the methodologies provides some unique insight as to what's going on in the market. So it would be interesting to see next week if this large spread that we see between spikes and VIX will come back to normal after the election.
Yeah, we usually only see this around the dividend time. So you're right. It's not really something we see outside of that area. But I will say this, Andrew was loving it on the show last week because his crystal ball guess was wildly off base, but that extra bit of juice in spikes kept him in the game. So he was very thankful for it last week, Mr. Andrew. So Mr. Matt. So at least you have one fan there, Matt. So there you go. You're winning fans here all the time. Let's go back out now to the Southern Volatility Mecca. Mr. Mark, an intriguing week out there this week. Everyone was kind of waiting on pins and needles. What would Powell have to say? Decision imminent, like they used to say back in the old Greenspan. I don't know if anyone's looking at Powell's briefcase anymore. I don't know if that might be a dated metric now. But back in the day, his Greenspan's briefcase, it's a half-inch thicker. We're in for it. I don't know if anyone's really locked in on briefcase with anymore. But Mr. Meatball, were you locked in on Powell's briefcase? What were your thoughts on what he said and then the market's reaction and apparently continued reaction so far, sir?
Yeah, I mean, talk about a rope-a-dope. They just pulled the rug over the market on this one. Completely fooled the market and ran it up and then turned it right back around. This is a huge intraday range. We're flat. You don't look at the market today and you say, it looks like nothing happened. No, something happened. We were making a run at 3,800 and it got flatly rejected. And they came in and crushed it. And we've been down on the day and they're trying to get to, they may be trying to get to, 30, they may be trying to get to 3,700 by the end of the day. It's pretty incredible.
And what were your thoughts as all this was going on this week, sir? Obviously, everyone was waiting. We were kind of speculating whether vol would come crashing out a little bit after the Powell event. We kind of did see that, a little bit of a warm returning now then. But what are your thoughts on what we've seen post-Fed, sir?
Yeah, I mean, it was talk about, it's interesting, right? We dropped 170 points and the VIX went down. What do I like to say? What's the scariest part of the movie? Not the murdering. It's when it's the part right before when they don't see the trader in action. And that is kind of what happened here.
The murdering, not the scariest part there, listeners. Yeah, an intriguing week out there for a lot of people. And you're right. We've been talking about this on other shows as well. People writing in saying, what's going on with VIX? They think of it as a hedge, and I've always cautioned against that. VIX in these scenarios, more of a kicker. You want to have it in your portfolio in case the craziness does come to pass, but it's not reliable, certainly in that sense. And as we've seen again this week, we've seen some pretty aggressive moves in the S&P, and vol has, for the most part, kind of shrugged its shoulders out there. So if you're hoping for a nice upside boom, not so much this week. Listen, let's get on out to the land of the futures. Before we get to VIX futures, Matt, when you're not talking to us, you're busy knee-deep over there in the world of Spikes futures. What's the latest and greatest going on in the land of Spikes futures right now, sir?
Hey, Mark, on Monday this week, SPKEX futures started trading in penny increments. So before this week, the minimum tick increment on SPKEX futures was 5 cents. Now it's 1 cent. And the results of this change have just been incredible, quite frankly, in terms of market quality. We're seeing really tight markets. I've seen markets that are 2 cents wide sometimes, but consistently tighter than 5 cents wide, and with good size on the bid ask. So we now have SPKEX futures have tighter bid ask spreads than VIX, and of course much lower exchange fees. So the value proposition of the SPKEX futures just continues to improve, and we're really looking forward to how this change in market structure continues to evolve, because I think it's going to have a real positive impact on this market. It's such a when you think about the futures industry, the tick value of $50 on VIX futures and formerly $50 on SPKEX futures, that's one of the largest tick values there are in the industry. And now, the tick value for SPKEX is down to $10, much more in line with other futures products globally, and appears to be very well received in the market this week, and should be well received going forward.
Sounds like a plan. Anything we can do to keep the ball rolling, more volume, tighter markets, always good for everyone out there. Let's get on out to the land of the VIX futures now. And as we kicked off the show, we saw that front portion of the curve mostly getting annihilated. That since has mitigated a little bit. When we kicked off the show, we had the no future down about a point, the DEES future down about 1.25 points. We just re-racked those coming into the start of this segment, and we have the no future pretty much erasing most of that loss. It's only down about 1/4 point now, and that DEES future down about 3/4 point. So it's gained back about 0.5 point there on the DEES future. If you're looking farther out now, you got to go all the way out. The juiciest future right now on the curve is out to July of next year. That's the only place you're going to find a north of 28 handle. Anything else is well below. It wasn't that long ago, listeners. A couple of weeks ago on the show, we couldn't find a single future below 30. So we have shifted this curve markedly just in the last couple of weeks. Mr. Meatball, sir, what is catching your eye out there in the land of VIX futures this week, sir?
The VIX futures curve really flattened up, or really moved to, basically back in a contango from earlier in the week. And we saw vol come out, the air come out of the market, vol come out. And, despite this crazy turnaround, we're still seeing VIX lower. It's pretty impressive.
It is impressive. Let's keep on rolling now to the land of vol options. Let's see if things are impressive out there as well. Mr. Matt, I know you're busy with SPKEX futures most of the time, but I'm sure you pay more than a passing attention to the land of SPKEX options. Anything catching your eye out there in the land of SPKEX options this week, sir?
Hey, yeah, Mark. In addition to changing the minimum tick increment on SPKEX futures on Monday, we also changed the minimum tick increment on SPKEX options on Monday. So previously, for option premiums below $3, the minimum tick increment was 5 cents. Now it's 1 cent. For premiums greater than 3, it was 10 cents. Now it's 5 cents. And that change is also having a positive impact on market quality. We've seen bid-ask spreads on out-of-the-money SPKEX options going from 20 cents wide to 10 cents wide, and in-the-money options going from 30 cents wide down to 20 cents wide. And something that you would not expect with a reduction in tick increment, we've actually seen an improvement in size. So average size displayed has gone from about 120 up to 140. So improving market quality on both SPKEX futures and SPKEX options as a result of these change in tick increments.
All right, looking at the top positions out there in SPKEX options right now, it's looking pretty similar to what we saw this time last week. The top position in SPKEX options. People still love these meaty in-the-money contracts on both sides of the ball. Number one, we have the NOV 12 calls. Number two, we have the NOV 160 puts. So there you go. Both ends of the spectrum right there. And number 3, we've got the DEES 10 puts. And then number 4, we've got, looks like a Jan 10 calls. So a lot of deep in the money contracts still lighting it up. Of course, we're missing some of the deep put spreads, 170, 180, a few other things I think that were going up in October. It'd be interesting to see if that paper continues to reappear going forward with Spikes options. Let's get on out now to the land of VIX options. It's been kind of an interesting week, all things considered. If you looked at these numbers, you probably wouldn't guess that it was a Fed week, given what we saw out there. And that's reflected in the ADV. It's down another 13,000 contracts to 585,000. So hanging out below 600K again this week. In terms of volume, we're seeing decent paper on the tape today, 343,000, but nothing explosive. Again, if we continue this downside move that it seems like we're heading for now, then maybe that might change. But right now, not seeming like a rock'em sock'em robots type of day. Before we get to all that fun, let's get to what the top positions are out there in VIX options right now. It cost you 103,000 contracts to break into the top 10 right now. That gets you to the DEES 45 calls. By the way, 8-2 calls versus puts in the top 10. So 2 puts have managed to sneak their way in. Last couple of weeks, it's been all calls all the time. So number 10, the DEES 45s, 103,000 of those. Number 9, the NOV 25 puts, 104,000 of those. Number 8, the Feb 75 calls. Now we're back to the fun stuff, listeners, 110,000 of those. Number 7, the NOV 27 puts, 113,000 of those. Number 6, the DEES 30 calls, 126,000 of those. Look at these actually relevant strikes percolating into the top 10. How refreshing. Number 5, DEES 70s, 153,000 open there. Number 4, the Feb 80s, 155,000 contracts open there. Number 3, the DEES 35 calls, 161,000 contracts open there. Numero due, the March 75s. Now we're back at it, listeners. 203,000 in there. And the number 1 size position in VIX options right now, the Jan 70 calls, 215,000 contracts open there. It is fascinating to take a journey. I encourage you to do it every now and then, listeners. Just take a journey through the size positions in VIX and see what's going on out there. It is fascinating and or head-scratching in that order. Let's get on out to the activity, such as it was from this Fed week. Like we said, today, not the most active of days, but respectable. 343,000 contracts on the tape today. The big dog today are the NOV 23 puts, 26, almost 27,000 of those have gone up so far, followed by 22,000 of the NOV 22 puts. So it's like maybe some put spreads going up as well. 13,000 for number 3 of the DEES 21 puts. Number 4, 12,000 of the DEES 45 calls. And rounding out the top 5 today, 11,000 of the DEES 37 half calls. Also got 10,000 of the DEES 95 sneaking in there, number 6, if you want one of our, shall we say, optimistic strikes. Yesterday, a little bit more paper on the tape. 511,000 contracts to be precise. The big dog yesterday, 33,000 of the DEES 28 calls, followed by number 2, 33,000 as well of the DEES 37s. Number 3, 28,000 of the DEES 35 calls. Number 4, 22,000 of the NOV 50 calls. Like maybe they were taking some of those bad boys off. And then number 5, we have 21,000 of the NOV 37 halves out to Wednesday. Little bit less paper on the tape on Wednesday, 420,000 contracts on the tape. Everyone was keeping their powder dry, waiting for Mr. Powell, apparently, and couldn't kick it into high gear enough to bring the total for the day above 420,000 contracts. The big dog on Wednesday, 29,000 of the NOV 35 calls. Number 2, 22,000 of the NOV 32 halves. Number 3, 20,000 of the DEES 28 calls. Number 4, about 17,000 of the DEES 45 calls. And rounding out the top 5 on Wednesday, 13,500 of the NOV 28s. Back to Tuesday, 515,000. That's kind of been the level we've been hanging out at for most of the week, listeners. 515,000 on Tuesday. The big dog on Tuesday, 49,000 of the NOV 37 halves, followed by number 2, 36,000 of the DEES 35s. Number 3, 35,000 of the NOV 26 puts. Number 4, 30,000 of the NOV 32 halves. And rounding out the top 5 on Tuesday, 27,000 of the NOV 23 puts. Monday, another light day, only 419,000 contracts on the tape. The big dog, such as it was on Monday, 41,000 of the DEES 35 calls, followed by 37,000 of the NOV 35s. Number 3, we've got the NOV 37 halves, 30,000 of those. Number 4, 27,000 of the NOV 30s. And rounding out the top 5 on Monday, 20,000 pretty much exactly of the D's 28 puts. So, Mr. Meatball, not a ton of crazy prints or crazy trades leaping off the tape this week. We're not seeing the pars or the 110s or the 150s or any 95s, any of these, shall we say, super optimistic strikes that we've been seeing throughout most of the year. It seems, dare I say it, mostly normal strikes that you would expect for a week like this, which in and of itself is somewhat bizarre. Anything catching your eye out there this week, Mr. Meatball, in a somewhat quiet Fed week?
Yeah, not a lot. It was interesting. Not a lot of like crazy VIX trades went up in the options. Really, it's been kind of a slow week. We did see some huge SPX trades over the last couple of days, but leading into the Fed, but no VIX, no real interesting VIX trades kind of hitting us in the face. I mean, today the largest trade is we got a 28.37 call spread buyer in December. It bought 27,000 of those. That was on Thursday. I'm sorry. Today, the biggest thing we've seen is the November 23 puts went up 11,000 times. That's, we got some puts trading today. Wednesday, Fed day, nothing, right? We got just some November 32 and 35 calls going up and some Jan 32s. Just really a slow week, kind of across the board. The biggest trade on the first was a buyer of the Nov 26 puts for $1.93. How's that trade working out? It looked a lot better this morning. And then on our spooky Halloween, the market was not spooked because the biggest trade was a 10,000 lot call spread and a 8-cent buyer of the Nov 55 calls. Or no, they bought 20,000 of the December 35 calls. That was it. So not really.
If you want really quickly, you want to hit those SPX trades. We got a couple seconds, sir.
Yeah, well, SPX was interesting. There was like splash buying of upside when we were rallying really hard. They came in on, I want to say it was actually after we talked, toward the end of the day on Friday, they came in and bought just a boatload of Nov 1, Nov 2, Nov 3, and Nov 4, like 3,900 through 4,000 calls, to the tune of 200,000 contracts on Friday afternoon. It was really interesting.
Isn't it funny to just say Nov 1, Nov 2? No, you could just say it's pretty much every day now. My brain still hasn't fully wrapped around that yet.
And, with all this SPX trading, that's all trading on the dailies now, I'm wondering what effect that is having on kind of the overall muting of the VIX and what that could do to VIX and volatility. Because really, you could trade Fed day like a minute beforehand in an option that was going to expire in a couple hours and at a way cheaper than going out to like December.
Yeah, it's like when we talked about when weeklies really came on again aggressively, what impact that had on monthlies, right? And now these dailies might have a similar impact on weeklies and indeed perhaps on VIX. Something is keeping VIX relatively muted. So there is certainly some effect out there that is lurking. Maybe it's the ton of upside. Maybe it's the dailies. Maybe it's some combination therein. But it is certainly an intriguing time to be watching all of this stuff. Let's get on out to some of the newest additions to the vol landscape right now. Of course, our new SPKX ETPs, good old SPKX, hanging out at about a 26.80. So it gained back a lot of juice. It was only down about half a point. It was down over a point when we kicked off the show. And good old Spiky at about 27.15 right now. It's down only about 0.6 of a point. That one is, of course, our levered friend out there. Mr. Matt, any interesting updates in the world of the SPKX ETP, sir?
Yeah, the SPKX ETPs are going really well. The SPKY, the 1.5 times long, is trading a bit more than SPKX. Markets are really good. We're seeing, 2 cent wide markets on both the ETFs. We're adding market makers, so we're getting better liquidity in there, and the funds are tracking NAV very, very well. So they're performing the way that we expect them to behave. And there are options out there. Some small trades have gone up in the options, so still very early days for the SPIKES ETFs, but really pleased with the way things are progressing.
All right, and let's progress on into some of the other ETPs out there, listeners. Let's get on out to the land of the inverse, aka SVIX, hanging out right now. Let's see, where are we hanging out right now? Hanging out at about a 1220, up about 0.2 of a point now. So that one kind of moving around a little bit today as well. Seeing about 2,000 contracts on the tape right now. So once again, going back to my supposition earlier that weekly expirations does seem to drive a lot of paper out here in these names, and that seems to be happening again. The ADV also continuing to tick up out here. It's up to about nearly 1,200 contracts. It's up about a little over 300 contracts from what it was this time last week. So SVIX starting to, dare I say it, attract some paper. Let's look at the top positions in SVIX right now. The top size position, 2,029 of the Jan 14 calls. I said we're hanging out at about a 1220. Jan 14s, you like those, listeners? That's the size position in SVIX right now, followed by 1,700 of the NOV 11 puts. Number 3, 1,500 of the NOV 12 puts. Number 4, 1,300 of the DEES 12 calls. And rounding out the top 5 out there in SVIX right now, 1,100 of the NOV 12 calls. So a lot of interest in the 12 strike, not surprising. Been hanging out and flirting around with that one for a while. In terms of what's lighting it up out there today, what are the big trades lining up this 2,000 contracts? The big dog are the NOV 12s. Go figure. 827 of those, followed by 760 of the NOV 11s. And that's pretty much all she wrote. It falls off a cliff from there, unless you want to talk about a couple of hundred of the March 8 puts. Those also trading out there today. Let's go away from the inverse, I should say, and off to the levered. We've got our friend there, UVIX, continuing to look a little bit weaker. It was down about almost 2.5 points. And coming into right now, it's down almost 3 points now, about 2.95 points on the day for good old UVIX. In terms of paper, again, kind of fulfilling this weekly expiration prophecy here that people love to trade these things on the expiration Friday of the weeklies. That's pretty much where we see most of the action. The rest of the week, kind of quiet. The ADV reflecting that, because the ADV is about 6,000 contracts, 6,100 right now. That's actually up about 200 or so. So it just shows it's not a huge change throughout the rest of the week. But then we have a day like today where, once again, 9,500 contracts have gone up today in UVIX. So it does seem like the lion's share of the paper does go up on Fridays. Let's look really quickly and see what's lighting it up out there today. The big dog today, the Jan 10 calls, 600 of those, followed by 400 of the NOV 9 calls, and 400 as well of the Jan 10 puts. Remember I said we're hanging out about a 9.5, listeners. And then number 4, we've got 364 of the NOV expiring today, 9.5 puts, and 364 as well of the NOV expiring today, 10 calls. So maybe someone unwinding a bit of a strangle and or risk reversal out there. The numbers are exact, which is kind of strange. In terms of the size positions, what's open for size out there in UVIX right now, listeners? The number 1 size position, 2,000 of the DEES 18 puts. So it looks almost similar to the top position in SVIX, at least from a size position, a little over 2,000 open in each, which is kind of interesting. This time it's the DEES 18 puts. That's an interesting strike, given that we're hanging out at a 9.5 right now, listeners. Number 2, 1,200 of the DEES 11 puts. Number 3, 1,200 as well of the DEES 30 calls. Now we're getting up there. Number 4, 1,050 of the Jan 15 puts. And rounding out the top 5 size positions in UVIX right now, 1,000 exactly of the DEES 25 puts. Mr. Meatball, sir, anything catching your eye or the eyes of your crazies this week out there in the land of our inverse friend, SVIX, or our levered friend, UVIX, sir?
Yeah, SVIX, it kind of doing what it does. It actually went from nicely up today to down a little bit. And, kind of showing what the VIX futures can do. And UVIX, if you like trading vol, this thing makes really nasty moves. It's got a great range today. The low for the day is 870, and it's just off the high, trading at the high is 962. So that's a nice 10% range in a single day. So that is a product to trade.
If you like some vol, you're getting it in spades out there in UVIX. The product that used to deliver all that, UVXY. Let's see what's cooking out there, listeners. UVXY hanging out about 9 3/4 right now, down about 1/4 of a point. So it's back below the 10 handle, listeners. So you can start sending in your questions. When are we going to see the split? When are we going to see the split? As long as it's below a 10 handle, you have a reasonable chance, or reasonable, I should say, reason to ask that question. North of a 10 handle, probably not so much. Seeing some paper out there today in UVXY. This is starting to remind me of the heady days back when VXX and even UVXY could sometimes threaten VIX. UVXY right now doing 420,000 contracts. So UVXY outpacing VIX options today, which is no mean feat out there. The ADV, though, weirdly enough, trending in the wrong direction. It's down 18,000 contracts to 219,000. So something is afoot out there in UVXY today. Let's see if we can find out what it is. 85,000 of the NOV 10 calls. These are expiring on the 25th. So these are in the weeklies. These are beyond the traditional expiration, listeners. Going up today, again, 85,000 of those NOV 10 calls, followed by number 2, 54,000 of the NOV expiring today. So on the 4th, 9.5 calls. And number 3 today, we have 23,000 of the 9.5 puts also expiring today. Number 4, 22,000 of the 10 calls, again expiring today. And the top 5 most actives today, the 9.5 calls expiring next week, 15,000 of those. So a lot of very near dated paper piling in here, with the exception of those 10 calls expiring at the end of the month. 85,000. That's a huge print. Let me just look really quickly if I can see if this is going up as a spread. Looks like they're just straight buying big chunks of these, but I don't see any blocks of 80,000 going up. It's just more of a aggregate blocks of 3,000, 3,000, 3,000, 3,000 all throughout the morning. Got to do a lot of those to add up to 80+ thousand, listeners, but that's what we've got going on out there in UVXY. Today, in terms of the size positions, let's look really quickly what's open for size. The big dog out there, the NOV 10s, 24,000 of those. So maybe our friend there is reestablishing. These are expiring today, by the way, the NOV expiring today 10s. Maybe he's looking to reestablish at the end of the month. 22,000 for number 2 of the NOV 15s. These are expiring on the traditional monthly. Number 3, 21,000 of the 10.5 calls expiring today. Number 4, 19,000 of the 75 calls in January. And then number 5 of the top positions in UVXY right now, listeners, 16,000 of the 10 calls expiring next week. Well, that's a lot to unpack here in UVXY. Mr. Meatball, UVXY suddenly springing to life with some paper. It's been kind of lingering. It's been kind of in a bit of a malaise. It's been moving, but we haven't seen the paper to go along with it, hence the fact that the ADV is continuing to erode. But today, someone's saying, hold my beer, kid. They're coming for size today in UVXY, Mr. Meatball. What say you?
Yeah, they are. It is busy, and that makes sense. Typically on expiration Fridays, we've been seeing UVXY blow up in terms of volume and get a lot of action going, and we're seeing some of that follow through today.
Are you guys out there trading UVXY still, listeners, or have you moved on to UVIX? Hit us up. Let us know. I'm curious your thoughts on these, listeners. And in terms of products that seem to maybe be having a bit of a resurgence, a slow resurgence, but it's something. It's VXX. We had kind of washed our hands of it on the show for a while. And then lo and behold, they decided to actually start making it useful for us again. So we had to go back and actually start watching it again, unfortunately. But fortunately for you, I know a lot of you folks like this one. VXX 1765 right now, down about 1/4 of a point. So that one getting a little bit of juice back during the course of the show as well. Today, we got about 62,000 contracts on the tape, so a pale shadow of what's going on out there in UVXY. The ADV starting to creep up, but only a little bit. 54,000 contracts is the ADV right now. That's up a whopping 2,000 from this time last week. But again, moving in the right direction if you're a VXX fan. Look at the top positions out there really quickly. 22,000 of the NOV 18 puts is number 1, followed by 18,000 of the 19.5 puts for number 2. Number 3, 15,000 of the Jan 3 puts. These are still those pre-split adjusted contracts. And then number 4, 13,000 of the NOV 17 puts. And rounding out the top 5 size positions open right now in VXX, we have about 11,000 of the 19 puts expiring today. Remember I said we're at about a 1760. So They're probably long, those bad boys, and maybe wishing they closed them out a little bit earlier in the morning as we're continuing to move a little bit up here in VXX. In terms of what's active today, let's look really quickly. The big dog today, the NOVE 20 calls, 11,000 of those, and then 10,000 of the NOVE 23 calls. Mr. Meatball, you are to blame for getting us to watch VXX again. We had tried to wash our hands of it. We had tried to move on, and like The Godfather 3, they keep pulling us back in. Have you started nibbling away at VXX again? You started trading this one again?
A little bit, but not really. I'd rather trade UVIX, but I am watching it. It's a good gauge of where vol's actually moving. It's starting to see some volume again, and the options are starting to get busy again. Yeah, so VXX is back. Has to be back on the map.
You know what else is back on the map, listeners? It's earnings season. Earnings vol. A big driver of what's going on out there in the markets. If you can look past the Fed, listeners, then sink your teeth into a little bit of earnings vol. Luckily for you, we are arming you with the data and the reports you need to safely navigate earnings season. Head on over to theoptionsinsider.com. Click on the options news and articles tab, and you can begin your journey to the dark side of earnings vol. You'd see a lot of big names are popping off this week. Uber, Pfizer, that was just on Monday. Toyota, AMD, Canada Goose, people have been writing puts in that name forever. Wednesday, we've got CVS, we had Cedar Fair, Roku, been on our most actives a lot this week. Qualcomm, Robinhood, back out to the hood. Thursday, we had Moderna, Rubber Shoe Vol, a.k.a. Crocs, Peloton. What's going on with that name? Is it continuing to implode, or can they turn it around? Coinbase, S-Bucks, Square, and DoorDash. Today, we have DraftKings and the Duck, a.k.a. Duke Energy. Just cracks me up. And Hershey, of course, out there as well. In terms of reports, we have it all for you here, listeners. The earnings move results, earnings season, earnings trade, and earnings move reports. For us, hit a couple really quickly. Some surprise names were popping off this week, and surprise in a number of ways. First off, in just their ridiculous outperformance. Take, for example, the name we talk about every Monday in our Name That 80s Wrestler segment. WWE, they're popping off after the bell on the 2nd this week. They went into their announcement, $77.54. This is the name, listeners, that has outperformed almost everything else, except for maybe straight nat gas for a little while there earlier this year. Everything else has been selling off this year. WWE has pretty much just gone straight up. So they are, if you're looking for your non-correlated asset, there you go. Wrestling. Who knew? They were pricing in, let's see, 6.3%. They delivered 5.5%. So pretty much in line. I don't think you're going to see a lot of shocking things coming out of it. That's one of the reasons why the stock has performed so well. Their revenue stream is stable. They're making money in spite of what's going on out there. So that's been a key for them. They're down a little bit today, but still trading right around $74. So they're down $3.50 from where they were going into their announcement, but still it is an active name out there. Robinhood was on the 2nd after the bell as well. They were at $11.40 going into their announcement. They're pricing in 12.3%. They delivered 9.5%, so a little bit of underperformance for the hood. Let's see where the hood is hanging out right now. $11.88, down another 44 cents today. It still is within spitting distance of where it went into their announcement. So from a net movement perspective, not a heck of a lot, but obviously you can play with your frame of reference a little bit there and get whatever you want out of some of these numbers. Let's go out to a local favorite here. This is Portillo's. They were yesterday before the bell. 21.10 is where they were going into their announcement. They were pricing in 11.3%. They delivered 7.3%. So far we've seen a fair bit of underperformance, which is interesting because this has been a bit of a banger season. And right now it's trading 21 3/4. So it's up about 60 odd cents, but still underperforming from an earnings vol perspective. Roku's been hitting it there. Moderna, we have all these names out there. Pizza Vol, check it all out for yourself. Coinbase and DoorDash on the 3rd. PayPal and Starbucks. Let's go out to today's names. We have the Duck, a.k.a. Duke Energy, ticker symbol DUK. They're popping out before the bell today. They're going into their announcement, listeners, $92.88. They're pricing in $3.11. In the past, they've moved to $1.79. So they're pricing in a fair amount of extra juice. Again, it's the energy sector, so you could probably argue that is warranted. And it's hanging out right now at exactly $92.45 So it's off 44 cents, 92.44 now. It's off 44 cents after pricing in $3.11. So a whole heck of a lot of nothing. Let's see, intraday range. They did have about a $3.30 range, though, if you look at net low to high. So if you look at it from that perspective, if you were really diligent, you could have maybe made your straddles work out there, listening, made your earnings vol work. But intriguing stuff nonetheless. We could spend the rest of the show looking at, there's hundreds of tickers popping off, listeners. You can find those for yourselves. TheOptionInsider.com is the place to go. Right now, the earnings season, we have the entire season broken down for you too. And after the first few weeks here, we've seen pretty much mostly green. That's why I was surprised to see some underperformance recently, because every week this cycle so far has been just blowing the doors off. Week 1, 106%. Week 2, a ridiculous 205%. I don't think I've ever seen that much outperformance since we've been running these numbers, which is a few years now. Week 3, 115%. Week 4, 120%. All that averaging out to 125%. So dramatic outperformance. Remember, 100% is if everything moved exactly as much as their straddle. 125%, obviously showing a bit of a banger season so far, and there's still a lot more to come. And in terms of earnings trades, my God, we entered a whole bunch of earnings trades for you here today. I can't even list them all. Starbucks bought a calendar. DoorDash bought a calendar out there as well. Tons of straddles and calendars going up here, listeners. If you want to see exactly what they were, the strikes, the expirations, how they're constructed, all that fun stuff, check out the earnings trades report over there as well. It's a newer edition, and it's pretty cool stuff, if I do say so myself. As we keep on rolling, it is time for the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, let's get to it. Vol voicemail. You guys ask us questions. We often turn the spotlight back on you as well. Let's pay off last week's question. This dovetails nicely with what we were just talking about, earnings season. We asked you last week, since the start of the pandemic, which is around the time that we really started tracking these, maybe a little bit pre-pandemic, the earnings seasons have only delivered somewhere in the ballpark of 85%. I think now with the most recent data, that's bumped up a little bit to about 92%, but still somewhere in that 85 to 90% ballpark. The 85 to 90% of the movement that they've priced into their straddles at the start of the season. And what is your outlook for this earnings season? Gave you three choices: 85 to 90%, so somewhere in that same ballpark. North of 100%, where we're hanging out right now, so action-packed. Or below 80%, which is pretty boring, but as a number of you have pointed out, if you're selling a lot of that vol, that could be pretty exciting. So take it as you will there. And we had a very weird tie for this one. We don't usually see this, an exact tie. 36.8% each for north of 100%. So action-packed, you're expecting a banger season. And also 36.8% of you saying you expect about the same, 85 to 90%. Only 26.3% expecting a below 80% or a pretty boring earnings season. This week, we got a pretty straightforward question for you. When we were out there crunching the numbers on a lot of these reports and looking at a lot of our earnings data, we noticed a fun fact. After Meta kind of screwed the pooch with their earnings, and then Amazon did the same thing last week, both of them had sold off down to about the same level, right about $100. In fact, they have continued that right now. So we thought we'd put it to you folks. They're both trading right around $100. Very simple question. Which one would you rather buy? Amazon, Facebook, or neither? You're washing your hands of both. Mr. Matt, sir, what do you think our audience is voting for? Are they going for the Amazonians? Are they going for the old Facebook and Meta? Or are they washing their hands of both, sir?
Well, if I based my answer on the number of Amazon packages that arrive on my doorstep every single day, which is they arrive every day, and sometimes there's more than one, and the number of Amazon trucks that are in my neighborhood that cause traffic problems. I would say Amazon.
You know, a Facebook truck coming to your door every day as well? But yeah, Amazon trucks. You have the same Amazon sickness that I do, I see. So I'm glad to see that I'm not alone, sir. So 1 vote for Amazon. Mr. Meatball, what is your vote if you have one? And B, what do you think our audience is voting for?
Yeah, I'm with you on Amazon. I think Meta has totally taken its eye off the ball, and I'd be looking. So I like Amazon of that group. That is that, and I'll bet you the audience is the same way.
You both have your fingers on the pulse of the audience. 68.6% saying they want to go the way of the Amazonians. They're addicted to their packages out there. Only 17.4% saying they're going the Facebook Meta route, and almost as many, 14%, saying they don't want anything to do with either of these names, which this week, that one has actually been the right choice because they have continued to sell off. Amazon right now, $88.60, so they have come for that hard. $89.50 right now for Meta, so Amazon actually the cheaper of the two, just on a straight sheer per share level. So they both have sold off down to the 90 handle or below now, so a rough week for both of them. Let's see if it's a rough week for all of our vol prognostications. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everyone, welcome to the crystal ball, the portion of the show where we break down what the heck is going on out here and what we're keeping an eye on for this time next week. And I'm trying to see if we have, here we go. Okay, yeah, there we go. That's right. We have here we go. They were just in a weird spot here. All right. So last week, I was feeling about a 26.5, a little bit north of that, 26.56. The Rock Lobster was feeling a 23.98, so he was feeling a lot of downside. And Matt, the keeper of the earnings data, was at about a 24.98. And let's see right now, as we're talking right now, Spikes with that extra bit of premium on it, 26.68. So that's looking pretty darn good for me. I'm pretty close to a bullseye there. And then VIX, we've got 25.10 or so. So again, a bit of a chasm between those two. 25.10 puts Matt also within a tenth of a point as well. So the two are about 0.12. I'm a little bit more than that as well. So Matt and I neck and neck here this week. The Rock Lobster, unfortunately, no good. Can we have a double bullseye? Can we have a rare double bullseye? Let's look really quickly. He's 0.11 away. That's rough. All right, I'll be nice. I'll give it to Matt with a bullseye. And then looking at mine here in terms of spikes, when I re-racked it here, where are we? 26.65. So 56. So that's that's 0.09. Oh my goodness, we have a double bullseye. Wow. I don't think that's ever happened on the show before. So Mr. Matt Amberson and myself both getting myself on spikes, Mr. Matt on VIX. There we go. I'll put the right answers in there. There we go. All right. So intriguing, an interesting week. Mr. Matt, since our guest got a bullseye this week, I will allow you the pride of place of going first. What are you feeling for this time next week, sir?
I think vol is going to be lower. I think we get the election out of the way. The vols will be taken out a little bit of the market. So I'm going to call 24.90 on spikes, which is spikes is 26.68 or 26.70 right now. So I think that large spread that you're seeing between spikes and VIX at the moment will tighten up after the election.
All right. And Mr. Meatball, your compatriot, the Rock Lobster, not getting it done this week, but I'll let you go second. What are you feeling for this time next week, sir?
Yeah, I don't disagree with Matt. We're coming off of CPI. The only real hurdle there is CPIs on Thursday. And that's what everyone seems to be prepared for and be gearing up for. I am, and if it's bad, markets are going to really hate it. So I'm gearing for a 27.72.
Wow, look at you. Look at you going. When's the last time you went upside like that? It's been a while.
I don't know. I don't usually.
Now you're freaking me out because I was thinking a little bit more upside, but now that you're going upside, I want to fade myself. but I'm not going as aggressive as you. I'm saying a little bit north of where we are, and actually kind of between VIX and spikes right now at about a 25.75 for me. So that's your vol market for this week, listeners. You got 27.72 on the upside, 25.75 for the Goldilocks prediction, and 24.90 for Matt on the dark side. All right, listeners, that's going to do it for another episode of Volatility Views. But before we go, let's go back around the horn. Let's start with Mr. Matt. Sir, Mr. Matt, if folks want to learn more about spikes or anything else, where should they go? What should they do?
MIAXoptions.com/spikes. That's for all things spikes related, spikes futures, spikes options, spikes index. And then for spikes ETFs, convexityshares.com. It's for SPKX and SPKY.
There you go, convexityshares.com and MIAXoptions.com/spikes. Mr. Meatball, if folks want to debate with you the pros and cons, the hithers and yons of all things volatility, where should they go? What should they do?
Yeah, go to optionpit.com and you can read my Volatility Edge piece that I put out every day. It's worth the read. It'll make you a better trader. It'll prep you for events.
There you go. Get that Vol Edge newsletter over there. Optionpit.com is the place to go. We got to get on out of here. For all of you on-demand listeners, that will conclude your broadcast week. Thank you for joining us throughout the week. We literally couldn't do it without you. For all you pro folks, hang out, get some fun stuff in the live chat. We'll be back in a little bit to break down the mad week of unusual activity with options oddities. And we're back again next week, all the way through to another Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.